Silver doesn't creep higher when the Fed cuts rates, it detonates. Take a look at this chart I grabbed from Guildhall Wealth Management. It's not the greatest copy, but you can clearly see that since 2001, whenever the Fed starts cutting rates, and that's circled in red, silver absolutely takes off 487%, then 502%, and then 250%. This averages out to be a gain of 413%. Now, before you start shopping for your new yacht, that's not my prediction. And thankfully, that's not some type of hype number. That's what silver has already done 3 separate times as an average over the last 25 years. Once after the dot-com crash, once after the global financial crisis, and again after the 2019 event that we can't say here on YouTube. Each time silver multiplied, not by 20%, not by 50%, but by hundreds of percent. And now, thanks to Jerome Powell's dovish comments from Jackson Hole, it appears that we're standing on the edge of the next cycle. If history rhymes, this isn't just a price move we need to prepare for, it's a generational wealth shift. We've discussed this many times on this channel. For you college football fans out there, you know Lee Corso's favorite phrase, not so fast, my friend. You see, each of those cycles has some kind of financial crisis related to it that help propel silver higher. That means we have some important questions to answer, such as, do we have a spark that could truly ignite silver to $200, which would be a 400% increase? And if we do have a spark, is it enough to propel silver beyond the 500% increase we saw during the GFC in 07, 08, and 09? Also, now that we know the first rate cut will be in September, how long will we have to wait for silver to really take off? Well, stick around and we'll just figure that out together. What is good, Stackers University? It's so wonderful to have you here with me today. And if you love silver, go ahead and hit that like button and subscribe while you're at it. Let's start by answering the easy question. We are absolutely in an ideal environment for silver to repeat its past performance that we've seen during rate cut cycles. But let's break down what happened during each of these cycles. During cycle number one from 2003 to 2008, that was after the dot-com bust. The Fed slashed rates down to the floor. Silver climbed from about $4 to over $20. That was a 487% run. Well, what else did we have as drivers for that market? We also had a falling dollar, China's industrial boom, and the launch of the SLV in 2006, which actually was helpful because it poured brand new investor money into silver for the first time. So that was simple. Easy money plus new demand channels equals explosive upside. But look at this chart, because I do need to point out that silver's price action wasn't straight up. Silver went down during the recession and was flat when the Fed actually started cutting rates in 2001. And it slowly grinded higher well into the rate cutting process. And it wasn't until 2003 that it really started gaining momentum. The good news is that it still had a 487% increase. Now let's look at cycle two, 2008 to 2011. That was the GFC and QE quantitative easing. Silver crashed down from $20 at the start of the recession to about $9 during the panic. While the Fed began cutting in 2007, we were in recession and silver was already in trouble. But once the Fed rolled out zero rates and quantitative easing, silver just bounced and it just ripped and took all the way off up to $49 by 2011. That was a 502% gain. Why did silver rip? Again, safe haven demand, collapsing yields, distrust in the fiat system was at an all-time high. Again, don't let the excitement of the 502% gain allow you to miss the price collapse during the recession and then the rebound. I also want to point out, and I don't mean to be a wet blanket, but we have to tell the truth here. We can't ignore that some of that huge gain was because silver went from $20 to $9 and then up to $49. So unless you bought at $9, you really didn't experience a 500% gain. Let's look at the most recent example in the event that I can't say on YouTube. We fast forward to 2019, and that's where we had cycle number three. The repo markets were breaking, the Fed was already cutting rates, and then that event happened. Silver first dumped down below $15, and notice in this chart that once again, it happened at the beginning of the recession. But once the stimulus checks and the trillions in liquidity hit, silver doubled. And you got to forgive me because this chart actually ends in 2022. Regardless, that was a 250% move in less than a year or so. Now, let's zoom out and make sure we're all on the same page. First, yes, silver has had incredible gains that have averaged out to 413% since the start of 2000. All of these big gains were preceded by a significant price dump at the beginning of the recession, which was typically around when the Fed started cutting rates. That average 413% gain is a little misleading because it measures from the absolute bottom, and most people have accumulated at much higher prices. The common theme in all of this, with all of these cycles, has been falling yields, easy money, broken trust, and fiat, which were amplified by the weak dollar and new demand drivers. And we have those all now. So, now let's talk about what that means for us today. The Fed is boxed in by debt, deficits, and inflation. Rate cuts are within eye range, but rate cuts usually mean a recession, and a recession is usually bad for silver price. That's true, but that's not always true, as you can see in the chart if you look around. I don't know that I can say this time is different, but it definitely feels like this has some uniqueness to it. First, it either feels like we won't go into recession or that we're already in a recession and the government will come back a year from now and tell us that the recession was back in 2025 when it's already over. That's actually great news for silver because that means it's possible we won't actually have the typical price drop at the start of recession that I showed you in those previous charts. The second point, the data we looked at started in the year 2000, and it's quite possible that we may be a lot closer to being in the 1970s and not the 2000s, meaning stagflation. I don't need to tell you how well metals did during the late 1970s. The rest of life kind of sucked, but metals did really well. This leaves me with two potential outcomes, and I kind of love both from a performance perspective. Possibility number one, this will be like the previous three cycles, but we are either in a recession or we will avoid a recession. But regardless, that means I'm not anticipating or shouldn't expect a significant drop in silver price like we saw in all those previous examples. If that's the case, then I can reasonably set my price range, my target price range, from as low as 250%, which is around $140 silver, to 500%, which is $240 silver. As a quick aside, that doesn't mean that it can't overshoot, but it does mean that the thumbnails rejecting $500 silver are made by people that are probably doing drugs unless you expect a 1,150% increase in silver price. If you believe that, I will sell you my silver right now at $200 an ounce. Think of all the money you could make. I'm just kidding. All right, possibility number two, we are headed for stagflation. And in that case, actually, those people that I just made fun of saying that they could be on drugs, it's quite possible we could see anywhere from a 5 to 7 or 8, maybe even 10x in silver price. Who knows if things get really heated and how bad things get. The issue is right now, we just don't know what that final catalyst is going to be. In the early 2000s, we had the dot-com, and the 2007 and 8 incident, we had the GFC. In 2019, we had that one thing. Here's the challenge. If you're like me, your responsibility as an investor is to deal in probabilities and not possibilities. It's possible that I can get my weight back down to 150 pounds, but is anyone really going to put a strong probability on that? All right, whatever. Let's just get back to stacking. So now you're probably thinking, okay, but when do I really take profits? That's probably the biggest question every stacker has. So, you know what I did for myself, because I'm a doctor that's not your doctor or your financial advisor, so I can't give you advice. I built a framework that I call the Silver Profit Ladder, which is my step by step plan for locking in gains without missing the best parts of the bull run. Because at some point, folks, we have to lock in profits and then roll them into the next opportunity. No matter how much we love gold and silver, the prices are cyclical, which means holding metals can be like holding a lit match. Sooner or later, you're going to get burned. Since this video is already going long, I'm going to show you that in part 2 that will come out tomorrow, where we really can break down this process and go into great details, and you can help yourself develop the perfect strategy for you. And hey, don't you even think about throwing tomatoes at me in the comment section. Do you think we're headed into a recession, or do you think we're already in it? Do you think this bull run will be more like the previous cycles in the 2000s, or more like the 70s stagflation? Or you can simply put an A plus in the comments if you received any value, if you're excited to see silver run, you want to show me some love, or you just want everyone to know that you always stack smarter and never stop learning.